Hi, Anthony here. This is a report based on research that I've done looking at gold's 2026 forecast. Before I get into the video, I want to reassure you that I'm the real deal here. I'm not a digitally enhanced avatar of any sort, right? This is the real me. And I'll be keeping it that way with all the videos that I produce. So let's get into this. We had a record-shattering 2025. Gold's heading into a really pivotal year. So the big question on everyone's mind is, well, isn't really if it's rising so much, but how high can it actually go? So this analysis is going to synthesize forecasts from some of the top market strategists to give you a clear picture of what we might be looking at for gold prices in 2026. Right out of the gate, the forecasts for 2026 are raising the stakes big time. Veteran strategist Peter Schiff puts a very clear number on the table, $6,000 an ounce. Now that's a huge jump from today's prices. I mean, believe me, he's not alone in this bullish outlook. Okay, then you've got monetary expert Jim Rickards, who takes that forecast and just blows it out of the water, suggesting a potential price of $10,000. He says a target like that wouldn't surprise him, not even a little bit. Now, you might just think these are arbitrary figures, right? Well, they're actually not. They're conclusions drawn from some incredibly powerful underlying global trends. Their conclusions are drawn from some incredibly accurate global trends. All right, section 1, gold's 2026 price shock. We've got to understand what could possibly fuel such a historic price surge. Are these audacious targets just some kind of speculative fantasy, or are they actually rooted in fundamental shifts happening within the global financial system? Well, it turns out there are 3 core drivers that are all converging to create what you might call a perfect storm for gold. We're talking about persistent inflationary pressures, significant geopolitical shifts, and the changing behavior of central banks. Okay, so section 2, the inflationary tailwinds. The first driver is all about monetary policy, specifically what analysts call currency debasement. Now, this concept is actually pretty simple. It's not just about consumer prices going up, but about the fundamental value, the purchasing power of your money going down. Peter Schiff points directly to one major catalyst for this, the return of quantitative easing, or QE. Now, the Federal Reserve might use some different terminology, but Schiff argues that QE, by any other name, is still, well, it's still inflationary. So what exactly is quantitative easing? Well, it's a policy where a central bank basically creates new money out of thin air to go and buy government bonds. I mean, this does inject a lot of cash into the financial system, but it also dilutes the value of every single existing dollar. Schiff's argument is that by resuming this policy, the Federal Reserve is knowingly just pouring more fuel on the inflationary fire. And this really highlights the core vulnerability of what we call the fiat currencies. The US dollar, for example, is backed only by trust and the government that issues it. As the money supply just keeps expanding, that trust and the currency's purchasing power erodes. This doesn't just impact us at home. It affects every foreign nation holding dollars, which naturally prompts them to start looking for alternatives. And this concern over currency leads us directly to the second major driver. Okay, so section 3, geopolitics, reshaping money. You see, this declining trust in fiat money is colliding head-on with a seismic shift or on the geopolitical stage. And it's accelerating a global de-dollarization trend. And the contrast between the two systems is just stark. The old system is all based on trust in paper promises, like the US dollar. But the new emerging system is based on physical assets like gold. And here's the crucial part. Gold has no counterparty risk, meaning its value isn't dependent on someone else's promise to pay. And it can't be devalued by just firing up a printing press. Jim Rickards identifies a critical turning point, the 2022 freezing of Russia's dollar reserves. That single act sent a huge shockwave through the world, signaling to every nation that their dollar holdings were not safe from political pressure. So in response, nations like China and Russia are hitting the accelerator on building an alternative system, and they're using gold as its foundation. Okay, on to section 4, central banks under pressure. Now this powerful force is the action of the central banks. These institutions are reacting to all of these inflationary and geopolitical pressures in a truly historic way, and their actions speak way louder than any of their official statements that you hear. Just look at this chart. For decades, central banks were net sellers of gold, but as both Jim Rickards and the World Gold Council have documented, that trend has dramatically reversed. They have become aggressive, record-setting buyers, preparing for a new asset-based system by accumulating the ultimate asset, and adding to all this pressure is a political dimension. Peter Schiff argues that the long-held pretense of Fed's independence is collapsing. The moment the central bank is seen as being influenced by politicians, the trust that props up the dollar's global reserve status, well, it just evaporates even faster. So that brings us to section 5, decoding the market's mood. With all these massive forces at play, what's the emotional undercurrent that's driving these forecasts? Is it greed for higher prices? Or is it something else entirely? You know, the dominant emotion driving these forecasts is not greed, it's fear. It's fear of a dollar crisis and financial warfare, and of a system reset. Analysts like Schiff and Jim Rickards frame gold not as some speculative bet, but as a central insurance against what they see as an inevitable great reckoning. Which brings us to our final section, the consensus price verdict. So where does all this lead? When you combine these powerful drivers with the market mood that's defined by fear, what are the resulting price targets we're looking at for 2026? Well, the baseline for the high-end forecast is coming together right around $5,000. Analysts like Garth Soloway and organizations like the World Gold Council see this as a plausible target if the current economic and geopolitical conditions just keep going as they are. But Peter Schiff goes a step further, setting his specific target at $6,000. This is driven primarily by his thesis of a US dollar and sovereign debt crisis that basically forces investors out of paper assets and into hard money. And finally, we have Jim Rickards' forecast of $10,000. He believes that once gold breaks through some key psychological barriers, a really rapid move to 5 digits could happen as the world just scrambles for safety from financial warfare and a collapsing trust-based system. Ultimately, these forecasts aren't just about the price of gold. They're pointing to a much deeper question for every single investor. In a world of constant fiat debasement, what is the true price of security? So definitely some food for thought there for you to ponder. If you're interested in trading gold, watch the video above on a gold trading strategy that could really make a difference as we head into 2026. With that, I hope you have a fantastic day. Thanks for watching. A thumbs up would be awesome. That would support the channel. Subscribe, hit the bell if you would like to be notified of more content like this. I'm going to be uploading regular videos. So with that, have a great day. and I'll see you in the next one.